Good morning, guys. It's Chris from DaxTrader.co.uk. It is Friday, the 27th of October, 2017. This is Dax Technical Analysis summary. Okay, so just to quickly run through that the webinars are for premium members. And if you want to get involved in those, then find out more information on the website. You can have a look at about DaxTrader Premium. However, before we get started, just need to mention that trading financial markets is risky, involving the risk of losing our invested money. The webinars are provided for educational purposes only. No investment advice is provided. That goes for the documents and videos as well. If you decide to enter a trade on the back of any webinars, videos, or articles, please do so entirely at your own risk. Okay then, so just quickly running through these while we've got a bit of time left on this video. So the profile for yesterday is ugly. There's lots of low volume nodes. It's fractured in its distribution, and we've already taken out the high of yesterday. So we'll see whether or not we get a revisit back to this. If we do, there's a couple of high volume nodes that would be candidates for a test. The highest is the point of control from yesterday, which is around 160-ish. So that's yeah, probably the best candidate short term. Longer term, I'm looking at a retracement back towards the initial point, the original point of ignition, which is somewhere in the kind of 90 level, 13 and 90. We're at an all-time high. We're at a new trend defining level, or should I say we've confirmed that we're remaining in a bullish trend because we took out the previous trend defining high. And I'm going to skip this particular chart, move on to this one. And so this current fork is still valid, and this is the daily fork for the three major swings here. You'll notice we took out the median line with a zoom, came back to test it a couple of times before a new point of ignition, took out previous highs, and has continued the higher highs, higher lows pattern, and we are still bullish. It was a little bit hairy over the last couple of days, wondering whether or not this actually is the start of a reversal, but now, depending on how bullish you are, you could argue the following, which will be that if this particular area of consolidation in here for the beginning of October turns out to be what could be called a balance point of this overall move up, then extended targets could be in the 14,000 level. Now, that may be ridiculous to say. Who knows? Time will tell. And it might take a while. We might not get that until the end of December. But if that does happen, it would be the upper median line parallel of this major fork, plus it would turn out to be a zigzag as part of the balance point. And those couple of areas would act as confluence with these time extension lines as well. All right, if you want to know more about that, come and join the webinars. We'll talk that through another day. Okay, go back to the charts. What a move that is. And I'd imagine that of that move, somewhere in the middle of that is going to be that quick move. Yes, it is. There probably is a little bit room left to move on this one, but that wide range bit in there could well act as a balance point for this overall leg higher. So retracement to the pivot would probably be interesting. Where's the pivot? So that 1390. There you go. And that's the level we discussed in the premium channel this morning as well. Okay, intraday, it's a bit early to be discussing the VWAP bands, but we have started to expand them. We're testing the deviation high. You didn't quite get a retracement back to VWAP, but that could be an interesting spot for an aggressive long. Alternatively, if we get a retracement down to the deviation low, there's another aggressive long opportunity down there. For the short side, fading this move, that's what it would be. You wouldn't be swing shorting probably from here, you wouldn't think. So fading this move, if you can get somewhere near 4-1 on your money, is an opportunity for bears, but it's aggressive. I'm definitely not selling this market right now. Yeah, there's nothing more to say other than that. This is a textbook example of a warning line bounce. This is a fork that was broken to the downside. You extend the line from the median line to the lower median line parallel again, and you'll notice that it took an almost perfect bounce off of this, well inside that fork now, and about to test this upper median line parallel. If you look at the bar action, you'll spot a couple of different points of ignition. You could use those as tested areas to come back to. So we'll mark those out on the charts as well, but that's great. And this is a perfect example of a triangle fail. It broke to the downside. It got rejected because it stayed within the trend defining levels. That's the key thing to keep in mind. For today, difficult to say, probably going to eat up some time, was mentioned in the channel, but look for a retracement back to these points of ignition. All right, guys, have a great weekend. Back on Monday. Come and check out the website for more information on the premium webinars. And yeah, we'll see you again on Monday. Take care.